All right, hello traders. It is Wednesday, March 19th, 2025, FOMC day, which is a big zero. We didn't expect anything to happen today in the markets for the most part. We expected the Fed to hold their rates. I think it was a 99% chance that the Fed was going to do nothing. Really, all of the excitement would be contained in was there going to be anything in the messaging and the post announcement conference that would come out that might move the needle one way or another. Seems like still a lot of uncertainty from the Fed out there. And overall, just another day, and we continue a little bit of the bounce. Let's take a look at what happened. We did close out some trades today. I'm going to go through the accounts there. I did put another video out. I gave you three stock trades today. There was six futures trades yesterday. So giving you a lot of trades of what we're doing. Let's get into the accounts. Let's take a look at how things are going out there and what the markets are showing us. So let's jump into the charts really quickly here and just run through a handful of these. You can see here on ES, we've been in this downtrend now all since the middle of February. So for about a month now. So for a month, we've trended down, four straight down weeks. This week, maybe we'll get a little bit of a bounce. Last week, if we look at the weekly, was a hammer candle. If we're going to reverse, you'd want to see us breaking through the top of that. We got close today, but not quite, but still a pretty good turnaround here. I'm not saying we're going to all new highs. I don't even believe we're going to all new highs, but bounces in a bit of a bearish trend here are certainly going to be fairly strong. And you can see a nice bounce here for this week. Now we're back up to the uptrend line. We're still below the 200. We're still below the 21, which is about to break the 200. We're below the 50. So really, we are still in a bearish trend on both the weekly currently, and the daily charts here. All this is for me is a bounce in the bearish trends until we start to establish some higher highs and higher lows. Right now, all this is in this case we have a lower low. We don't have a lower high yet, but anything all the way back up to the previous high is a lower high, and then maybe roll back over. Certainly expected a bounce. I think everybody really thought the markets were a bit overdone. It was a pretty harsh 4 week move and a little bit of a relief rally here. The bears just kind of ran out of juice, but I'm sure there's going to still be some activity. We are really just stuck in this tariff tantrum cycle where we're waiting to see what's going to happen on April 2nd or sooner. What about these reciprocal tariffs? There's a lot of countries that are really taxing things from the US that the administration is not going to like, and they're going to raise tariffs and taxes on all these other countries in direct response to what they're doing. So uh, they want it to be fair, and I totally understand that. I'm not taking political sides here, but I totally understand the move. And I think until those things get cleared up, that we stay in a bit of this up and down malaise that we've been in. Are we heading to a recession? I don't know that we are. Things are in pretty good shape. Maybe things are slowing down a bit, but hey, price of eggs is down, inflation is down, the market's down. So some good things, some not so great things, all in here. I think you just got to be able to trade what you see here and not what you think. So I think this move is good here. We're at the downtrend line. If we get any more follow through, that would be excellent. If we fail here at this downtrend line, we certainly can come back down, retest these lows, and the last thing we want to see is a bit of that H pattern developing. So the worst thing would be to come back down and touch this and break it, as opposed to a W bottom and getting a double bottom in and moving higher. But that being said, MACD is moving higher, RSI is moving higher, stochastic momentum is moving higher, all on the daily. The weekly still is a bit negative here, so I don't think we're out of the woods. Bearish PSAR. I think right now you just treat it as a temporary bounce and trade what you see. If we look at oil here, And because of that on ES, let's go back to that for a minute. What am I trading? Well, I don't want to trade anything uh, that gives me a lot of downside risk exposure because I don't see anything here that says this is an all clear. The weekly does not look great. This is a bounce right now within a downtrend. It's um, a higher low, but not a higher high and not a series of higher lows right now. So there is no uptrend here. I don't think you should be getting ultra bullish. I think you can play the bounce. But I think for our trades, which are typically a little bit longer term, more like 60, 90 uh, days or so, out there. I think you've got to be cautious that this thing still comes back down, and this was just a little bit of a relief bounce. And we stay in this sideways pattern, which I think is really good for strangles. So I like the strangle opportunities here on ES. We have one right now. I also think a 112 trade still sets up really well here. And I do like the at the money 111 trades. I think if you think we're going to move back down, but maybe not that bad, that's not a bad trade to be in. All right, if we look at oil, here, oil's trying to just hang in there sideways. It's been in this sideways zone now for a couple weeks. We can draw this pattern out. So as oil has just been sideways trending now for like 2.5 weeks, nice bottoming process. It's a bit overdone on the daily. There's still weakness on the weekly. We're holding a little bit of a support area here, but I don't really see big catalysts for oil to move substantially higher. I just don't see the catalyst. I don't see a big expansion in the economy in the U.S. or anywhere else. I see lots of production in oil, so I just don't see a need to get ultra bullish. I don't know that you need to be ultra bearish. I think the strangle is a good setup here, and I think the 112 trade absolutely perfect on oil here. No risk to the upside. I even think a Jade Lizard in here is not bad either. So I think anything that gives you no risk to the upside, a bit of a trap to the downside. I think oil staying above 60 here is still pretty likely, but I think we can drop further from here. So a couple different trades on oil. Gold running away to the upside. I've tried for 2 days to get trades on gold, couldn't get filled. Really, I was doing Jade Lizards where I wanted no risk to the upside, but I wanted a bit bigger trap like a strangle. I wanted a strangle with no risk to the upside, which is your Jade Lizard. I think we're moving beyond that. We're getting overextended. We can stay here and stay overextended. We stayed overextended previously from September through the end of October. For 2 months, we were extended on that move. Then we settled back down and then moved higher. I think we're getting extended again, but we can stay here for a month or two, as we've seen. I think you just got to be careful in here. I think anything that gives you no risk to the upside, but I don't want to get super long in here. I'd love to see a pullback in gold somewhere back into this range a bit or to this uptrend line around 2,900. I think that would be a great opportunity to get long on gold. Bonds moving sideways nicely here. It's in a, it's broken the downtrend on the weekly, which is great. We're moving sideways. We're in a decent little uptrend here with some sideways consolidation as we come down, bounce off the 21 and the 50, and maybe slowly move our way higher. If we think the Fed's going to start cutting, I think that's going to be good for bonds. I think we're 1 or 2 meetings away from a rate cut from the Fed, but I think they're coming. So every day we get a little bit closer. I think that's good for bonds overall. I think you've seen rates dropping a bit. I think these set themselves up really great for strangle. We just closed the strangle winner today. We've got another strangle on in here. I think uh, we can certainly be selling call credit spreads, naked puts, and strangles on bonds. I'm going to just skip all the way to RTY. Overdone, breaking out of this really sharp downtrend here. I don't think this is any signal to just go get long and go bananas on the E-mini Russells. Here, maybe we found some support. I'd like to see some more consolidation. I just don't think a trade is there. On the Aussie dollar, I think this sets up well for a strangle. The only thing that concerns me a bit on this would be, you know what, we'll call this a level here, but uh, this is a bit of a rising triangle here that if we can break out to the upside as the US dollar continues to fall a bit, breaking out of this range might give us a pretty good upside, but I think a strangle in the Aussie dollar, not the worst trade to put on. Really quickly on a few stocks. Amazon here, we got long. Talked about this trade today in a video. I think selling puts on Amazon here is a good opportunity. I think this thing is priced pretty well. I think 204 is the intrinsic value on this. It's selling, it's at 195. It was at 192 or 3 today. I think if you can get yourself in here for something longer term, it's not the worst trade in the world. And we've got several leaps and naked puts on in here. Meta, struggling, hasn't done really well. It's still hanging on to this downtrend line, which we can keep extending here for now. Something looks a bit like that. Until that gets broken, nothing to do, but is it getting oversold and overdone? Probably. But I think there could be some more and some consolidation needed. I wouldn't just rush into Meta here. It's not something for me. Nvidia, I called this one out. This could be a bit of a bear flag. I would be very cautious if this thing breaks down below here, below this channel, then I think we could see some more downside. I did call it out today that I think you could be selling around the $80 level, which is where I think the value of this is. I think it's a good opportunity in here. If we get any more weakness, I think it becomes an even better deal. I think everything that we heard from Jensen Huang at the conference yesterday, pretty positive, good looking stuff for NVIDIA. I think longer term, this thing does just fine. Tesla, it's just meandering down here. It's right at this tertiary downtrend. Then you get a secondary downtrend here, and then the primary downtrend right up here. There is a lot of repair to do on Tesla. However, I don't think it's the worst spot to nibble a bit at Tesla. And you're getting some nice consolidation in here, and I think not a bad spot to look for Tesla to start to bounce. If it breaks one or two of these trend lines, I think you're in good shape. All right. I'm going to Microsoft. I don't see a lot of positivity here. This thing just does not look great to me. I don't like to trade it. It's not my favorite company. I think there's just better things to trade out there, but could potentially be breaking this downtrend a bit in here. Just watch the consolidation, but it wouldn't be the worst time again to get into something longer term. Google, I like where Google is sitting here. Nice hammer candle yesterday. Good follow through to the upside today on decent volume. Pretty nice. We've had these hammer candles for 2 to 3 weeks now, and we cannot get any follow through on Google. I'd like to see if at the bottom of his Bollinger Bands that we hit yesterday and right in this area, I think Google sets itself up to be nibbling at some of these things. Palantir, it's still overbought for me. Here, it's overvalued in my opinion. Is it worth somewhat of a premium? Yeah, but it's not worth 2x the premium. I think it's a $40 intrinsic value. It's at 86. Maybe that's just the way it's going to be on Palantir, but it's not a good enough deal for me to go bananas and get in. SoFi, I do like it down here. I think this is giving you some opportunity on the financials. This thing looks really nice down here. We did get in with some long puts or some short puts, I should say, selling naked puts on it. I like where SoFi is sitting. I think this $11 mark, really solid support. Anything below at 11 or below would be a great opportunity. I like JPM here. Just like SoFi, I like what we're seeing in JPM. We got into hood today as well. I covered that one with you. We're starting to move out of this downtrend to the side. Really good volume today. RSI rising, MACD rising, almost to the positive line. Stochastic momentum rising. I think you can see a really good move coming on Robinhood. We got long today on Robinhood. Let's take a quick look at the trade tracker for you, and we'll run through it quickly. Today, sitting at 667 or 627 on delta. We're very delta neutral. We never really got far out of our delta neutrality here, around 0.2%. Got a little bit up to 0.32 one day, but or 2 days, but that's about it. We did drop some theta today because we closed some trades. We had a bond or a ZB futures strangle come off for a 50% winner, and then we had a 90% winner on our 112C naked put. So those things came off today, dropped our theta down. We're a little light on theta. We'll see if we can make that back up a bit. Net lick at 379, 610. That puts us up again for the year. We're up a little over 11,000, a little over 3% on the account. Net lick is down primarily because SPY is down. SPY with the market dropping 10%. Our SPY leaps is really what's holding our net lick down to the tune of about 12 grand for the year. So if those come off, that'll put us back up to the near our year-to-date highs if SPY starts to recover a bit here. Everything else is totally fine. Our buying power usage is at 51%. We did get a little high in the 70s and 60s, mostly SPY related, with VIX dropping today back under the 20 mark. SPY getting a little bit of a bounce. That helps our capital today. But other than that, we've generated almost 6% in realized gains. We have taken a few losses. This month, we closed out two losing naked puts. And then we closed out a poor man's covered call for a loss just because I wanted to move on and redeploy that cash somewhere else into some trades. So I think we'll see that pay off. But we had such a great month last month. We're still up $20,000 for the year through the first 2.5 months of the year, up almost 6%, while the market's down 3%. I'm fine with that. What's working so far? Well, 112s are still doing fine, even though we closed out two losers, but we had a winner this month. SPY leaps are doing fine. They're not coming off because they're not really decaying and the market's been dropping. I'm not expecting those to generate any income for another month or so. Future Strangles doing great. That's our number 2 strategy overall. Strangles still, to me, one of the best trades out there, and I just don't see enough people doing it. Love the trades. We're doing great. We generated 10 grand on those. Our bear trap trades were down just a fraction because we did have to stop out or close out on one. But everything else is good. Zero DTE, we've made 8 grand this year. We're up 5 grand for the month. We didn't put any on today. We'll still probably a few more on this month, generate some additional cash. The poor man cover call, we just closed a Tesla one out for a loss just to free it up. We could have held on, kept generating cash. I had better uses for that cash. So I just bit the bullet, got out, and moved on. And then as far as spec trades go, we've had a great year with spec trades up 10 grand so far. So there's where we are on that. Quick look at the portfolio for you. You can see I practice what I preach. We've got Strangle on oil. That thing's up 5%. We got another Strangle we just put on 2 days ago, which is down, $25 flat, which is perfect. This is what we want. We closed out some trades today. Here we closed out a naked put trade. We've got another naked put down here at 50%. We've got this Strangle down here at 3% winner, and then just a bunch of hedges and put debit spreads that have some juice in them that we'll look to see. If we roll back over, these will pay off. If not, maybe we'll close a few for some winners and take some profits on put debit spreads that you don't expect to get a profit on. Out there, we've got more put debit spread ratio hedges. These are all in great shape. Nothing to do here. Bonds, we closed one out. We still have another Strangle left on bonds. That's up. We've got our SPY trades. Almost all of these are SPY leaps. Okay, the SPY leaps are down. They're not down crazy. They're just not up right now. So we just wait. We're almost at the max. We're not putting any more on. They're chewing up about 105 grand worth of buying power in the account. But we do have a poor man's covered call working. The short call being breached a bit on today's move, which is totally fine. I'm only in it for the extrinsic value. There's still another $148 of extrinsic to come out. I don't care if this thing loses or wins, because if it loses, that means the longs will be winning like they did today. So you can see even the covered call was lost 237 today, but the longs were up 518. So again, I don't care about going in the money on covered calls. We'll let this thing just continue to operate. There's still extrinsic value. We've got 2 more days left on that when this gets to at least 90% or more, or then we'll close it and we'll put a new one on. And I think we're in great shape. So there's where we are on these trades. Nothing to really do here. We've got some buying power. I identified a few trades on here for you guys. We'll be looking at, maybe we'll add another bond strangle. I might add an ES strangle in here, and we'll keep plugging away, and maybe another at the money 111 trade, which we just had one payoff for over 500%. So if you got some value out of this today, again, as always, click the like button down below. Would love to have you help us out. If you're getting anything from this, do me a favor, hit the like button, share this with other folks. Maybe you can get a trade idea or two. If you got something out of it, you can pay me back by just hitting the like button. That's all I ask from you. If you're not a subscriber, what are you waiting for? Subscribe. And if you're not in the Discord, oh my goodness, you got to get in. We are doing some great things in there, having a great year in there. We've got some people at new all-time highs in there, great traders, great trades, really great education, a whole new course coming out, 50 to 60 video course, all free and included in the subscription for you, and a whole nother course coming out on top of that. So there's a ton of education. You got to get yourself educated. You got to make yourself more valuable. What have you done every single day to improve your trading and your investing skills? If you suffered a bit in this downtrend, get in there and get some education so that you understand how to really work the markets great, not just watching people telling you, okay, buy Tesla, buy Palantir, but no, you got to learn how to actually put on quality trades in there without stressing yourself and without seeing your account going bananas in this little bit of a move that we've had. We're going to give you some of those great strategies, some great hedging strategies, a ton of education. And again, that's in the end, that's exactly what you're looking for. If you want to get in, down below, use the code KING, get 40% off the first month, get in the Discord, folks, and see what we're doing, learn, grow, and contribute to the community. We'll see you later. Take care, bro. Bye-bye.